201 out of 450 equity mutual funds have delivered lesser returns than the average returns offered by National Pension System equity schemes in Tier 1 in the last 1 year. This news may have left many readers worried as to which is better among mutual funds and NPS. Well, don't reach a conclusion yet. Give 5 minutes to this video and you'll get clear answers. Hello and welcome to 5 Minute Finance by ET Money, where we talk about investing and personal finance for beginners. So this video is going to be all about mutual funds or NPS Tier 1, which is better to invest your money in. The news articles we spoke about clearly talks about a very short time period of 1 year. But since both NPS Tier 1, which is the mandatory account, and equity mutual funds are meant for your long-term goals, they are long-term investment instruments. So it becomes essential to look at how these two investments have done in longer time periods. So let's dig in. Now, instead of trailing returns, which tell us returns only for a single time period, we used rolling returns. So we looked at 5-year rolling returns rolled on a daily basis for both the instruments. Now, for those who don't understand rolling returns, well, rolling returns is like calculating trailing returns, assuming you are investing on a daily basis. Or you can say it is like a daily SIP for a certain interval and then taking an average of the series of returns. For a more detailed understanding of rolling returns, you may watch our other video. Coming back. So we looked at the 5-year rolling return rolled on a daily basis between September 2016 and September 2023. What does it mean? Understand it like this. We took the 5-year returns of equity schemes under NPS Tier 1 for all the 5-year time periods that could be there between September 2016 and September 2023. This gave us 514 such time periods. Now we took the average of returns of all the 514 5-year periods between September 2016 and September 2023. This gave us 5-year rolling returns. Before proceeding, if you are wondering why we are talking about last year's data, well, as we have taken out the rolling returns where the sample size was huge, 514 time periods, slight variation in returns won't change the returns data. We checked the recent returns of the NPS schemes and mutual funds. There isn't much difference than the results we got. So as we had done a lot of calculations some time back, we safely continued with the same data. Now, the returns are on your screen. The chart shows a comparison of average 5-year rolling returns for all the 7 pension fund managers that have been in existence during that period and the 5-year rolling returns of different categories of equity funds. So the long-term average returns from NPS stood between 11.6% and 13.4%, whereas different categories of equity mutual funds on your screen have given between 11.67% and 15.45% returns. So what do you think about the returns? We can see the average returns are similar, but it's not only about returns. Remember, in case of NPS, you are not allowed to invest more than 75% of your total portfolio in equities at any time. So an NPS Tier 1 investor cannot achieve these kind of returns as we saw above due to the 75% portfolio allocation cap. Oh, so does it mean you'll be better off in mutual funds then? Well, it's not that simple. Let's look at various factors that can help you decide between mutual funds and NPS for your investments. Number 1. NPS is a government-backed retirement scheme. If you opt for its auto option, it changes your portfolio allocation automatically as you grow older and near your retirement. Remember, it's not only about returns, but moving to a lesser riskier option as you near your retirement is important as well. Number 2. While NPS Tier 1 does not allow withdrawals before the age of 60 as it is a retirement investment product, so restrictions to withdraw till age 60 is not necessarily a drawback. But as mutual funds do not have any such liquidity concerns, they can be a great option for other long-term goals like your child's higher education, child's marriage, buying house and so on. Number 3. Apart from NPS, you can save for retirement in equity mutual funds as well. This can help you diversify your investments for retirement across various investment vehicles, which would help you to manage risk and liquidity of your portfolio in a better way. So to conclude, well, while both mutual funds and NPS are market-linked investments, they are not an apple-to-apple comparison. Both are managed by professional fund managers. We saw while comparing their rolling returns, both have shown decent performance in the long term. But while NPS is a retirement tool, Equity funds can help you save for your different long-term goals without any liquidity concerns. So you can have them both in your portfolio. And for ease, well, you can invest in NPS as well as mutual funds through a single platform, ET Money app. And just like SIP in mutual funds, ET Money app allows you to invest via SIP in NPS as well. And it's a wrap. Hope you liked the video. Don't forget to share and comment. Also press that bell icon to never miss a video from us.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.